All right, it's day 3 of journey from a broke beginner trader to a profitable one. I'm about to get into some work right now. Uh, I didn't just, but I finished work later on today, and I had to do some things before I had any free time to myself. So right now it's actually the next day is 12 a.m. right now. I'm gonna try to do two work blocks. So 4 hours in total. Just drank some coffee. I'm ready right now. I'm caffeinated and everything. So yeah, we're gonna start right now. Right now, I'm gonna go back into my old courses, and I'm gonna read over the fundamentals of forex, how it works, and all that type of stuff. I'm trying to make sure I actually know how everything works before I move on. So yeah, I'm gonna try to do 2 work sessions. So work block A and work block B, 2 sessions, 4 hours. Yeah, let's get into it. Day 3.
Round 1.
All right, so I just finished with a refresher of the fundamentals of forex. I didn't go through everything, like not every single thing. I went through the things that I'm not really sure about. The things that I know that I'm confident about. I didn't go through those, but the things I know I'm not confident about, I'm kind of like hesitant about them. That's the ones that I that a refresher about. So first thing, what is forex? Before, I thought forex was like um when you trade currencies for each other, right? Then I realized forex is an umbrella, and under the umbrella there is futures, options, and on spot forex. And I did not know that. I thought forex was just spot FX, or trading currencies against each other. I did not know um forex, the foreign exchange market, was futures and options as well. So that's what forex is. And me being a currency trader, my trades are in the spot FX market. Well, not in the market, but yeah, that's where I get my exchange rate prices from, or where my broker gets its exchange rate prices from. um Next thing I learned about is the forex market size and liquidity. um so for the forex market size, there's something called the interbank market. The interbank market is where large banks or large institutions go to trade with each other. Also, the forex market isn't a it doesn't have a centralized location where everyone just goes to trade with each other. It's a decentralized market. Just multiple markets. So there's not one market, just multiple of them all around in one in a network. A network. Um yeah. In currency trading, the dollar is king. The dollar is the largest economy in the world, so it's one of the currencies that are mostly traded, and it's also a major currency. The other major currencies are I'm gonna just hit the letters, but it's GBP, EUR, JPY, and no, not CHF, like yeah, and CHF. I can also do CAD, NZD, I said EUR. Well, yeah, just other. I just don't remember what I already said, but I have them right here actually. So it's EUR, USD, NZD, GBP, CAD, JPY, AUD, and CHF. Those are the major currencies. Those are the currencies that are traded the most. These things right here are the ones that confuse me the most. But before that, how to trade currencies. So you aren't trading currency. You aren't buying one currency and trading it for another one. There's something called a CFD, which is a contract for difference. With the contract for difference is a contract between you and your broker. Your broker gets prices from the spot FX market, and then he gets those price. They get those prices and place them onto their platform, where I then speculate whether price is gonna go up or price is gonna go down. That's it. Me as a retail trader. I am not trading in the forex market because the market players that are in the interbank market do not trust retail traders, because we are seen as a risk. We don't have enough capital to be able to trade in the interbank market. The market players that are in the interbank market are, as I said, large banks, hedge funds, and market players that have a lot of money, a lot of capital. Next thing is, yeah, as I was saying before, these are the things that I didn't get, but I'm trying to understand them now. Margin trading. Margin trading is a set amount that is set aside per trade every time you wanna let's say you wanna trade a standard lot, but you want to trade one standard lot, but you don't have 100,000. Margin trading allows you to put a smaller amount, a percentage of the notional value, which is the 100,000, aside to trade the 100,000. Next thing is required margin. Required margin is a amount of the 100,000 that you need to have to be able to open a position size of 100,000. So it could be 2,000 of 100,000. It could be 1,000 of 100,000. But yeah, required margin is an amount that you need to have. And it is set aside for you to be able to open a position size of, let's say, a higher amount. It's like a safety for your broker. It's like a safety, just in case the trade backfires and it goes the opposite way. Yeah, it won't hurt your broker. Next thing is margin requirement. Yeah, margin requirement is a percentage of the notational value. So it's the same way as the required margin. See how the required margin is, let's say 2K of 100,000. The margin requirement is a percentage of that. It's the same percentage. So it'd be 2% of 100%. So let's say using 100,000 and using 2,000. The 2,000 will be 2% of the 100,000. Equity is the amount. Okay, it's your account balance versus plus your unrealized profit or loss. Your equity goes up or goes down whether your trade is losing or whether your trade is winning. That's what your equity is. Your equity is your unrealized P&L versus your account balance. Wait, plus your account balance. Free margin. Free margin is margin that you are that is available to use to open other trades. Used margin is margin that is already used. You cannot use that margin anymore. You cannot use that money anymore. It's already been used to open current trades or that are already open positions. Like open positions, the money that you use to have those open positions is a used margin. You cannot use that money anymore because it's already being used. Margin call. A margin call is when your broker reaches out to you to tell you that price has gotten to a point. It's like a level. Let's say you have a stop loss here, and your let's say your target profit is right here, but price goes down, and it hits your margin call level. Your broker will then call you and let you know that price has gotten too low to your margin call level. And your stop out level is below your margin call level. When price hits your stop out level, your broker will automatically close your trade. So yeah, those are the things that I went back to learn more about because I didn't really get them, and I think I understand them a lot more now. So yeah, that was the end of work block A. I'm gonna try to do work block B right now. Yeah, I'm gonna take like a 5-minute break just to chill a little bit, and then I'm gonna get into work block B. So yeah. All right, now we want to get into block B right now. So since that I feel more comfortable with the fundamentals now, I wanted to make sure I was comfortable with it or a little bit more confident with it before I even moved on with anything else. So I'm gonna go back to what I was working on before. Back to where is it? Yeah, the chart patterns and everything. So yeah, that's what we're gonna be doing now. Okay. All right. Yeah. So work block B. We're gonna get into it right now. Yeah.
Round 2.
All right. We got. I didn't get to finish work block B. Bro, I feel like right now I honestly feel like I'm just writing this to write. I'm not retaining any knowledge whatsoever. I'm so tired. It's 4:30 in the morning right now. I'm tired. Yeah, I'm tired. But nevertheless, in what I learned in work block B was rectangle chart patterns and wedge chart patterns. With rectangle chart patterns, there are times in the market where price consolidates. What I mean by consolidates is it just goes up and down, up and down. It doesn't create a trend. It doesn't create higher highs or higher lows, and it doesn't create lower lows or lower highs. It just goes up, down, up, down, up, down. When you see those in the chart, you then chart it out with a rectangle, the resistance and the support, and then when price, if price ever goes above or closes above the resistance or closes above below the support, it kind of signals to it signals to you what price will be doing next. It's called this is basically a breakout strategy with that one. Yeah, with the wedge charts, there are patterns called the rising wedge, the falling wedge. With the rising wedge, there are times where price is in a uptrend. Yeah, price is in an uptrend, and it creates higher highs and higher lows, but it creates higher highs at a slower pace that it creates the higher lows, and that signals to you that price is going to break through and create a downtrend if you're in an uptrend. It's gonna go down if you're in an uptrend, and that's a rising wedge. But for falling wedge, it's the opposite thing. If price is creating lower lows and lower highs, but it's creating the lower lows at a slower pace as it's creating the lower highs, then that kind of signals to you that there's going to be a breakout soon, and price will be reversing into uptrend. And how you draw the both the wedge and the rectangle patterns are like this. Hold on. This is how you draw the wedges. You connect the highs with the you connect the highs with the lows for a downtrend wedge, and you connect the highs with the lows for a uptrend reversal as well. And for a rectangle, you plot out the resistance and the support levels of the market when it's consolidating. Excuse me. And then when you see that price is starting to break through and closes above the resistance or support, that's how you know. That's how you know price is going to be shifted to that direction. Let me show you an example right here. Price came down and closed below the support, and price kept going back down. So yeah, although I didn't get to finish the full work block B, that's what I learned. And yeah, that's going to be it for day 3. I know I only got 3 hours in today. I finished work later on today, and I had the finished work. I've been working from like 9 all the way to like 6. So and I had to do some stuff after. Although I could have worked a little bit longer. Yeah. So that's gonna be it for day 3. And yep. Yes, I'm gonna see you guys for day 4. All right.